Welcome, everybody. Welcome to this webinar offered by the Trading Pit. And today we're going to talk about diversification strategies in trading. And we are here with Illimar, Mattus, and Roberto Riccio. Welcome, guys. Thank you for being with us tonight.
Hi, guys.
I'm very excited for this webinar. We're going to talk about some sensitive topics for traders. This is going to be very interesting. And we are in good company. We have Illimar Mattus, who's our founder and is a trader and entrepreneur he has been for more than 20 years. And so is the big man at the Trading Pit. And next to him, we have Roberto Riccio, who's a Bloomberg certified trader. He manages money, he's a coach, he's an influencer, he's a very good trader. And so I'm really excited to hear the two guys in conversation tonight, delving into diversification strategies. And so before giving them the scene, I just want to remind everybody that all the material published and disseminated by the Trading Pit must be considered exclusively as general information. So we're going to have a chat tonight, and we don't mean to give investment advice, solicit to purchase or sell securities, etc. You have the disclaimer on screen, and so be mindful of that as we progress with our webinar tonight. So guys, diversification strategies in trading. How do we want to kick off this webinar tonight?
Well, okay. For me, it's always a pleasure to co-host a webinar with you guys. It's always a pleasure. And I have my first cheeky question for you, Illimar. And that's the question. What's the best advice you could give about risk management? Because a lot of people, a lot of traders are always to use just the 1% risk on their trade. And do you diversify your risk when you approach to a trade? Do you have like a fixed amount of risk on each trade, or do you diversify like the risk on each trade?
Thank you, guys. First of all, Fabrizio, Roberto, ciao tutti. I speak a bit Italian as well, but not enough to discuss today in Italian. So pleasure to have you, and pleasure to be here as well with you. So I'm going to try to a bit give you a view into my let's say background and my experiences as a trader as well. So in general about risk, so the problem that majority of the traders have with risk management in general is that they actually don't have risk management.
Yes.
So that's the biggest problem. And if I look at I have a lot of data I see from the brokerage side. I see also a lot of data from the prop firm side. What I see is that in fact more than 80% of all trades that originate from retail traders, like ordinary traders, like you, me, and anybody else, is so 80% plus of trades they don't have any stop losses. So that's like a good start. And my advice always is that for all the traders out there, that if you start trading and you are not capable of putting a stop loss on every single trade that you are opening, then you should stop trading at all. So that's like number one. So the reason why a lot of the traders don't have these stop losses is actually very simple. So one, there is a psychological reason because they think that fundamentally when they enter the trade that they know better than the whole market. So hence, if they, let's say, buy Bella Ragazza, they buy gold, for example, then they just think that gold is going up, and they don't even like try to like realize that it can go also down, and hence they don't put the stop loss. The other thing is that even if they do want to place a stop loss, they are struggling because they don't have the methodology or the techniques to actually analyze and understand where to put the stop loss. So for example, if you meet like any trader, and I do meet every day a lot of traders on the trading pit side as well. Like I asked a simple question: what is your risk management rules? What is the policy? Like, where do you place the stop losses? You would be surprised that 90% of traders have difficulty answering this question. They simply don't know where the stop loss should be. So coming to your question then about myself, is that I try to limit my losses to 1-2% on the trade, and the maximum this daily loss I am capable of experiencing on my account is up to 2%.
Oh, okay. So also, if you are very, very, very confident of a setup, you just risk like this kind of amount.
Yes,
a fixed amount.
Yes. But I want to explain one thing, is that it's also very important, because we talk about like diversification today. So you can diversify in terms of the time frames. You can diversify in terms of the asset classes. In terms of the strategies, whether you trade scalping, whether you trade swing, whether you are like very long-term trader. So when I place, for example, a large position, then for example in Coco, that I was also like sharing in my Twitter a couple of weeks ago, I don't have this let's say daily stop loss, because the position size that I enter, it's just so small for my account, and I'm trading like for a very like long term, so I don't want to limit my potential with like these micro changes within the day. So for example, with Coco, when I entered the short in January, eventually I made like 15% return on that Coco short. So there were days that the position was actually more than 1% in the loss, But because for me it was very, very small position for the overall account, and the position was for a very long term, then I didn't have this very tight stop loss. So tight stop losses I have for intraday trading. Short term, up to the close of business, tight stop loss. That's it. And the other element I wanted to say is that there is also like trading and somewhat like very long-term trading, which can be called also investing. So when Warren Buffett, for example, his latest position is Occidental Petroleum in the US. So when Warren Buffett starts buying Occidental Petroleum, he doesn't put like 1 or 2% stop loss there, because this position that he opens is for very, very long term. And also the other thing is that for very large positions, like so for example in Coco last year, at some months I was doing 2 to 5% of the whole options volume on the ICE exchange. So my own account, 2 to 5% of the whole options market. So you can't have like this extremely tight stop losses, because if you send 500 contracts as a click to the market, you will wipe off the whole market. So it depends a lot, like, diversification, what is the time frames that you are trading, and what are the position sizes that you are trading, and based on that, you have to kind of develop your own risk management approach on the markets.
Illimar, do you have also like different strategies? Do you diversify like the strategies for each asset you are trading? I mean, if you trade cocoa, you have a different strategy if you are trading like gold or stuffs like that. Do you diversify also the strategies for each assets?
So, for example, in cocoa, my positions are generally 2 to 6 month long positions. And when I trade, for example, currencies, I trade only intraday. Because the problem with currencies is that if you take euro dollar, then the euro dollar is like it's behaving like it's in a corridor.
Yeah, it's consolidating.
It's and it's very, very difficult to take like very long-term positions also, because you have to bring in the geopolitical risk. Every day Trump is tweeting at X, it moves the market like 50 to 100%, 100 pips up or down. So it's very, very, very difficult in that market. But cocoa, I have longer positions. In gold, I think your community likes a lot gold as well. So in gold, I'm trying to be less than 1 week. And in stocks, so stock indices as well, it could be years. So again, the risk profile, the time frames are completely different between different asset classes.
And Illimar, what about like diversifying accounts? So, I mean, for instance, what I personally do, I used to use like different account for each trading style. Like, for instance, if I trade scalping, I have an account that's different and completely separate from swing trading account. So this can help me out to maybe not being influenced by the small movement. If I make a scalp, I just, and I'm already into a longer term position. I mean, I'm not influenced by like the small movements. Do you think that's important for you? Do you do like the same, or you are doing just in one single account?
In the beginning, when I started like many years ago, so I had this like it wasn't really trading what I was doing. It was more like gambling. I think all the traders, like when they originally start, they perhaps take too much risk. They are too confident in themselves. And so I had these smaller accounts, and I was doing like more aggressive speculative trades. And but I don't do this for years already, for many years. So today, how I trade, I have two main accounts. So one with one broker slash bank, and the other with another bank. So I trade with like large banking partners, and I do all the strategies on the same account. So I don't separate the strategies into different accounts. And the reason I'm doing it is that because I have also long-term positions and without any leverage, which means that I have at all times a lot of available leverage and margin on the accounts. So this is why I use like a single account for all the trading. So on one, for example, bank that I'm using, so I have like long-term stock positions there, which have lasted for years already. I have futures positions there, which are like a couple of months. I have FX EFT positions, which could be like intraday positions. So it's all on the same account. they are cross margined as well, so actually reduce my margin, and it just helps. It's better in terms of money management, risk management, and overview as well of all the positions and risk that I have at any given moment on the market.
And what about like choosing options instead of futures? How do you diversify like the kind of instrument and to trade? I mean,
most of like derivatives traders, they know that like 95% of plus of all the options, they expire worthless. And so in fact, like if you open 100 options trades, let's say randomly, then 95% of these trades will expire worthless. So knowing that, what I do with options mostly is that I either hedge my positions, or if I have, for example, a large position in some asset, or what I also like to do is two strategies. So say I have like a long-term position in Tesla, and Tesla is like rallying, so the chart goes vertical. And then what I like to do from time to time is I like to short the call options on the position that I have. Let's say I have like a 1 million position in Tesla, and then I short the call options for Tesla with an exposure of 500,000, so 50% of the stock position that I have. And the reason I'm doing is that so if the market is overextended, it goes vertical. So first of all, the option prices become really expensive, and I capture this premium. And the other thing is that like if the move is very extended, and I have an underlying position, then my thought process is that holy Jesus, that if the market really reaches my call strike level, I would actually be okay taking half of my position off at this level, exercising the call, and then buying at the lower level. And the other strategy I use is with the put option. So for example, when like last week's, remember Tesla was dropping from 480 to 325. So I was shorting put options on Tesla at the levels of 275 and 300. So I was short the puts, and the reason was that my thought process was that holy Jesus, if Tesla really drops to 300 level or 280 level, I would be happy if my put options actually get exercised, and I'm able to buy Tesla at this level, 280, like 300 level. So Tesla didn't drop to that level, which meant that the short puts I had actually expired worthless. So I captured the premium from these put options. So this is something that I like to do a lot with options. It's like bancomat for me.
That's a very cool strategy. Do you apply it only to like stock markets or also to commodities?
Also to commodities. So for example, if I have like a longer term position, like for 1 to 2 months, etc., and I'm like deep in the profits already, then I like to sell like premium, either like call premium or the put premium, to increase additionally my profitability on the trade. So that's and the way that I do it, like, so both in Tesla's case, for example, is at the moments where the implied volatility of the instrument is very high, which means that market is really crazy about something, everybody's in panic, which means that everybody's hedging their risks either with the calls or puts, depending on whether the market is like rallying or dropping, and it just creates like really good opportunity to short the either calls or puts, whichever the market is going.
Illimar, I was impressed about one thing. I think like the audience thinks the same, because you were telling us you are able also to manage and to hold positions for like years. How do you feel about emotions? What's your secret about not being involved with this trade? I mean, like being detached by the floating and by the profit itself could be the key. Treating like this business, trading like a business could be the key. But if you can give us also some other advice, this could be cool.
The guy I really admire, is this Warren Buffett. So imagine he has had a position in Coca-Cola for 50 years. He's had a Coca-Cola position longer than is my life. And I've always admired is that probably if he opens in the evening before he goes to sleep, he opens his bank account and he sees that he has a Coca-Cola position which is 40 billion in the profits. How is he able to cope with this emotion and not close this position? I just really admire this approach. So I must tell you that I'm not really as perfect as Warren Buffett. I would like to be as perfect as him, but what has helped me is to stick with to fundamentals. So, for example, one of the longest positions I've had was as well for years was with one bank in Estonia where I was a shareholder, and I just knew that fundamentally they are growing. So when you have this information, you know that the fundamentals are right. It's growing, the business is improving. Some people who are working there. So I was holding for years on that position because I knew that it's going higher. And also I think what has helped me a lot is that so I'm trying to detach myself emotionally from longer term positions by focusing my mind on short term positions. Because intraday, for example, if you take intraday, your focus is only on the intraday positions. And this is where my focus is going. And on the longer term positions, what I do is I just look at the fundamentals, the information once a week. Just over the weekend, I check, okay, I have these 7 stocks in my portfolio, or I have this long position in S&P 500. So what is happening this week? Is it is the position still right? Do I still want to be in the long, or I want to close something, or etc. So are there any alerts on the market for that? So that's the second thing. And the third thing is that what really has helped me is that because I have these businesses as well, the trading pit and those of you know also Tickmill. So I'm also co-founder of Tickmill, a brokerage firm. So 90% of my daily time goes to the business, which means my mind is constantly focused on the business. I'm not checking every 5 minutes. Okay, what is my stock portfolio or what is doing? I just don't have time for this. And it's also I think it's important also to note that those of you who have a job or who have a business, it's easier to trade when you have an additional income. So imagine that you don't have a job, you don't have any business, and your only income is trading. So emotionally, it can have a very big impact on you, especially from the losses side, because you lose, let's say, 1 day, you lose 2 days, you lose 3 days. You start thinking psychologically that, holy shit, if I continue losing like this, then eventually I will lose my money. And this creates emotional stress for you. And stress and trading, they don't go together. So anybody who's like hyper stressful person is not going to be good at trading. So, for example, we have Roberto, you here, we have Fabrizio. So both of you are good traders, like intraday traders as well. I know you for quite some time. So both you are emotionally very stable personalities, which means you can handle the stress that markets are creating for you.
So this is very important, Illimar, because most of the traders, the newcomers, thinks that like having the secret strategy could make you like the best trader in the world. But the key is that you have to focus on the strategy, I mean, but also on this psychological impact. It's very, very important. I totally agree with you because a lot of traders think that if they approach to trading, they can quit instantly their job. And this is not correct. This is not like...
I mean, I don't want to be sound like negative, but I think I will actually sound realistic. Is that I really want to give to your audience as well, like and our like clients who are on this call as well, is that don't treat trading as if it is like some sort of like golden egg that you go to like academy, some class today, you start trading like after the first let's say classes that you take, and miraculously you become rich overnight. It's not the case. If this is really what you are expecting as a trader, to become rich overnight, then don't start trading, because your emotions, your desire to become successful so fast, they will actually start interfering with your dream of becoming successful. And also what I want to stress out is that trading, while I consider it to be the most interesting profession, most bella ragazza in my life, none of the successful traders have become successful in 1 month or 2 months or in 1 year, etc. And I always like to give this example that the best hedge fund in the world, it's Renaissance Technologies, which was started by Jim Simmons. So he died just recently. So Renaissance Technology is built by the guys who are geniuses, math, physics geniuses. And a lot of the traders, they would be really surprised is that in the first 3 years, when they launched Renaissance Technologies, they were really struggling. Like they had really difficulties making money, to the extent that Jim Simmons and his co-founders were discussing among themselves that, hey, maybe this trading is really not for us. Maybe we should go back to science, etc. But they were like working hard, trying to improve their strategies, and this is like what eventually will bring you to success. You cannot give up. Like those who give up, trading is not for you. You will never be successful.
That's a very nice advice, Illimar. You are bringing like a lot of hope to the newcomers, because giving up, it's not an option. If you are really passionate about trading, you have to establish like passion in what you are doing, because like you said, when if you truly believe in fundamental, when you take a trade, if you truly believe in the fundamental, you keep going, the trade. I mean, if you truly believe in trading, eventually you will become profitable, because you truly believe in something.
Roberto, I always say one thing, that so every person who is smart, who is passionate, can become successful in trading. Every person. And because there are just so many opportunities there, and everybody can find their own niche, where they can be successful. So, for example, like if you let's say you come from a family where your father was like working in some like beverage company. Let's say he was working for Coca-Cola, and then Coca-Cola, the ingredients, it has a lot of sugar. It has a lot of like other ingredients. It has macroeconomic elements there. So you can talk to your father or like your brother or your neighbor or your friend who has some like, let's say, inside information, not the real inside information, but industry information about some specific market or some industry where you work. For example, Italy is very popular or very strong in engineering. We have Ferrari, we have a lot of like engineering companies there. So a lot of the Italian traders are also very good at algorithmic trading because they have engineering, this programming, this background. So, for example, in our company, some of the best traders are Italians because they have this like engineering, math, science background. They kind of like see the things from a scientific like perspective.
Yeah.
And so I think everybody like has an opportunity to become like successful if they put in the work.
Illimar, I'm not an engineer, but that's the way how I eventually developed like my bankomat strategy, because I was thinking like I was so in deep of the markets, I had to develop my own strategy, and I think that my like engineer approach to the market eventually helped me out to create like my strategy, because I was thinking and I was like willing to create a strategy that was fully objective. And that's I mean that's the key point also about the engineers. They are good because they have like they choose the trades with objectiveness. I mean, so cool.
Absolutely agree with you.
Yeah, and I have also another question, Illimar. So, for instance, if you take like a trade that is lasting like 2 or 3 or 4 years, how do you define the right moment where you have to get out about this trade? The timing, I mean.
Okay, so long term is really easy. Like when I look the changes of the fundamentals, like when the fundamentals have changed, or like there is not like much potential left. So for example, I was for very long term. I was this shareholder in Tesla. And I'm not a shareholder in Tesla anymore. So I sold, actually started selling last year most of my shares. So I don't have any Tesla shares. And the reason why I sold Tesla shares is that the fundamentals change from this perspective that, today you have already electric cars from BMW, from, Volkswagen, from Toyota, from the Chinese. Chinese are coming very, very strong to the electric car market. So it's not the investment thesis is not there anymore. Tesla is not the only company who is able to produce good looking, reliable, trustworthy cars, So so the competition is increasing while, let's say Tesla market cap is like close to 1 trillion. And Toyota is, I think, 200 billion. So they produce the same amount of cars. So why should Tesla be like 5 times more expensive than Toyota?
Sure.
So the fundamentals are not there, you know, and in terms of like let's say commodities, it works like the same way, you know. So for example, cacao. I don't know how is cocoa in Italian.
Cacao.
Cacao. Okay, so why I started shorting cacao end of last year was that because I've been trading cacao for many years, and I have established like a network of contacts within the industry. And so end of last year, I started getting signals from the industry participants, like producers. There's one like country in Africa, it's called Cote d'Ivoire. So and they produce like 80% of all cacao in the world. So last year, at the end of the year, in December, I had some chat with producers of cacao in Cote d'Ivoire. I don't know how it's in Italian, this country. It's Ivory Coast.
Ok. Ivory Coast. Okay.
Come si dice in italiano?
Costa d'Avorio.
Costa
d'Avorio.
Yeah, so Costa d'Avorio, I had some discussions with the farmers there, and they say that actually the new crop is coming in quite good. And so I started understanding that the market was still pricing in that, you know, the hell is going to break loose, you know, Jesus is going to land on earth, you know, and everything will like collapse, etc. Whereas the farmers that were actually growing cacao there in Cote d'Ivoire, they say that, but you know, the crop is coming in quite strong actually.
Sure. And it's very important for you to have like this kind of informations from producers when you are approaching to commodities. I mean, because commodities are much more handled by producers, entrepreneur, and so on.
Yeah, so I think I think the traders that are like watching us now, I think it's important. Diversification is important, but it's important to select the markets where you want to build your experience and knowledge base. So for example, for me, these markets are cacao, orange juice, gold, S&P 500, crude oil. So I'm like, even in X, you know, X.com, like the guys I'm following, they're talking about these 5 instruments. And so I'm like constantly in this information flow about these like 5 instruments. And this is my diversification. So I mostly trade between these instruments.
Sure. And what about like stock markets? For instance, if you decide to invest in Tesla, do you diversify with also the same stocks but listed on other markets? I mean, for instance, you truly believe that electrical car will go up. This kind of industry will go up. Do you just choose the biggest company, or do you diversify in other companies as well?
So how I look at the stock market, I look at the macro themes, like what is happening on the macro level, and let's take out another bella ragazza. So let's take out DAX index, a German DAX. I think Italian traders, they love DAX.
Yeah, they do.
It's bella. And so if you look at the DAX index, DAX has become vertical. It's like crazy. It's crazy. And why it has become vertical is that because German economy is doing really bad, actually. You know, electricity prices are high. There is no economic growth. Inflation is still high. And, you know, Volkswagen was shutting down one of their factories in Germany just last year. It's not like really good. DAX is going up. DAX is going up because everybody now is talking about that the Ukrainian war is going to end. Okay. But why is DAX going up then? It's going up because when the Ukrainian war will end, they need to rebuild the whole country. Because it's all the places are bombed, infrastructure, electrical grid, power plants, factories, everything is destroyed. Which country is the best producer of equipment, technology, appliances to rebuild infrastructure? 2 countries in Europe, Italy and Germany. Okay, so this is my macro team for the next 3 to 4 years. So I think what will happen is that when the Ukrainian war will end, and the markets are already expecting it to end, there will be actually a drop in the stock markets because it's gone up so much. Everybody will start selling, taking in some profits, but there will be a fundamental long-term demand for Italian and German companies. So my plan for the next 3-4 years is to start investing into Italian and German stocks that are related to electricity, technology, manufacturing, all of this for the next 3-4 years. And when I take these sectors, I like to take multiple stocks. Not just one stock, not like Siemens or some Italian company, but like 5 to 10 companies in the sector, and just hold it for the next 3 to 4 years. That's my strategy.
Okay. So you diversify in the same niche.
Yeah.
Illimar. So for our audience today, we have a special gift. We have a prop firm. We will gift a prop firm to our audience, to the best answer to the person that will make you the best question. So do we want to read because they are typing a lot of questions, do we want to read some questions?
Yeah. Why not? Maybe we go a question and answer session. I will try to answer very short because I like to talk about trading, but I will answer really short. And then in the end, I will tell what was the best.
Sure.
Yeah, guys. In fact, there's really a long list of questions from the audience. Some of them are very technical. Everybody, I think, wanted to know about the early beginnings of Illimar's career, the motivation, the training that you found, who was your mentor, how did you come about making of trading your main activity when you were young. And so Illimar, if you briefly want to answer that, and in the meantime, I'm going to scout all the questions and I'm going to pose them to you.
Okay, so I started trading in 1997 when I was 18 years old. So that's 28 years ago. My first years were very, very difficult, and the reason they were difficult was that I had no mentor. Because I'm originally from Estonia. In Estonia at that time, there were no trading academies, nothing. There was no information available on the internet because there pretty much wasn't any internet. So how I started learning was when I went to university. I was 18 years old. I started reading a lot of macroeconomic and financial analysis books. And this is also the reason why up until today I'm more macro focused. I like commodities, I like currencies, I like gold because it's macro related. And then I started trading in the US in stocks with a broker called Datek. Today it's part of Ameritrade group, and it's traded US stocks. And in the end of this 1990s, and just started following some of the guys in the US and their newsletters, and reading a lot of books, and that's effectively what helped what helped me a lot. And then like a big push what I really had as well was that in Estonia I was surrounded by other traders. So my advice to beginning traders is go to the communities where there are other traders. And then you start learning like different strategies, like you start learning like what are the mistakes they have made, etc. This is the best advice I can give to you. Don't sit at home just watching some YouTube videos. Like go to trading communities, some academy, and build a network around you of other traders. And by the way, some of the best advice that I got in my trading career when I started did not actually come from successful traders. This advice came from actually very bad traders, because they explained to me what is wrong with their trading, like what mistakes that they were making. And as in business, like in trading, my objective always is that I try to switch the sides. If something is not working, I try to look from the other side. Okay, but what if it would work on from that side?
Very interesting. Well, there's a technical question. What is the coming from Giuseppe Bifara? What is the single market asymmetry most undervalued by retail traders, but which institutions consistently exploit to their advantage?
Okay, I would not say it's a market. I would say it's perspective on the market. So the most money on the markets is not is made from very simple perspective, to follow the trend. And the retail traders, 90+% of traders, they always go against the trend. So, there's a lot of discussion about like market makers are bad or awful, etc. Market makers are just taking the other side of the trade, and they always follow the trend. Nothing stops the retail trader, or nothing forbids the retail trader to follow the trend. So my advice is that, let's say take S&P 500 for the last 15 years. It's been going up all the time. So the long-term trend is up. So if you buy the tips, you would have made money on the S&P 500. Even holding your loss-making position for a very long time, you would still have made money. So always follow the trend. Bella Ragazza gold has been going up for years. Yes, it has some pullbacks, but the long-term trend is up. So when all the retail traders have been shorting the market, all of the institutional traders, like myself as well, we have been long gold for years, like for literally years.
Yeah. Friend is your friend.
Friend is really your friend.
Yeah.
Well, this is also quite interesting coming from Vitale. With the growing automation and use of artificial intelligence in trading, do you believe that the role of human traders will become obsolete in the future? Or would there still be niches where human discretion remains essential? And based on your experience, what key skills do you think a trader must develop to stay competitive in the next 5 to 10 years? That is pivotal.
Something that I'm really interested myself about right now, and I'm really sad because I don't have time for this, is I would really like to go into this artificial intelligence and start automating some of the strategies that I'm using. So I would encourage all the readers to try to utilize artificial intelligence, not just to create strategies, but also to analyze your trading history. So, for example, try doing this thing. So go to ChatGPT, upload your whole trading history, and ask ChatGPT, please give me advice how I can improve my trading. And you would be amazed like how detailed response it will give, that, hey, I noticed that like 30% of your trades don't have stop losses. I noticed that you always go against the trend most of the cases. You have a higher probability of having success trading WTI crude oil than trading gold. So hence you should focus on crude oil. It gives you so much like information, like what you can actually improve when you upload your trading statement. So will the human traders become obsolete? I don't think so, because some of the strategies are maybe even done better by humans. But I think AI will not only overtake the trading, but AI has already overtaken the trading. So those who don't know, crypto trading mostly is actually done by artificial intelligence, and algorithmic strategies are running the crypto markets today. Most of the liquid US stock futures markets are run by algorithms. So it's already there. It's not that it's going to happen. It's already happened.
Thank you, Illimar. Well, next question is on more on the topic of prop trading. So many traders fail because they don't fully understand the real business model of prop firms. In your opinion, what is the biggest misconception traders have about prop firms, and how does the trading pit differentiate itself from others to provide real growth opportunities for its traders?
Okay, so what most traders when they enter the prop industry, what they do wrongly is they get access to this, let's say, 100,000 or 200,000 account, and they become reckless. So they start over trading, and this is, I would say, the number one mistake that they are making. On top of always going against the trend, never having stop losses, but over trading, and I would say even gambling on the accounts that we as prop firm provide to these traders. So my biggest dream with the trading pit is that I want to find the top 100 best traders in the world. This is my dream. And when I find these top 100 best traders in the world, I will stop all the challenges, accepting all the new clients. This is the moment I will do that. So my objective with the trading pit is to create a closed club of 100 best traders in the world, and then invest my money into this pot, and to attract also external money, and make money trading. And that's my objective. The fastest I can do it, the best it is, and this is what I want to achieve there. And yeah.
Amazing.
And Fabrizio, sorry, I would add one extra thing is that in our case we are not against profitable traders. Oftentimes they say that, hey, prop firms are against profitable traders. It's not the case. To the contrary, we are very interested in successful traders, but we are very interested in successful traders who are consistent, or are able to make money consistently and manage the risk. So, for example, last week, I actually personally asked to close down one account in China. For example, there was one Chinese client. I looked at the account, and what this guy was doing was he just went all into cryptos. 1 week he was buying all in, the other week he was selling all in. Sometimes he blew up his account, sometimes he won some account. And I just explained to the guy that, listen, we don't want this gambling here. We want consistency. We want seriousness in terms of the trading, and because it's really our money. It's not that we take this money from from some guy on the street, and then we throw it on the accounts. And it's our money, and we want to make money with investing this money. And yeah.
Absolutely. Well, there's a personal question on your career, and this came up twice. So I figure I would ask if you want to answer. What was the most difficult moment of your trading career, and how did you overcome it? If you feel like sharing it.
Okay, so it was 15 October 2008. That's the most difficult day of my life, and I will explain it why. So 15 October 2008 was my 30th birthday, 30. And I had a birthday party together with my brother Illimar, so he's actually my twin brother. And we had a birthday party, and all the friends were around us, like 50 people. And at that day, S&P 500, you can go back in history, 15 October 2008, S&P 500 dropped, the whole stock market dropped 10%. 10%. My account at that time was 1.1 million US dollars. I lost with options, with futures, more than $100,000 in one single day. At the time, during the hours when all my friends were surrounding me, they were like partying, dancing, like, and I was like every 5 minutes checking my account, like boom boom, and I just saw that, like how the money was burning. And that was like my most difficult, because it was very emotional. But it was difficult also from that perspective, that I had all my friends around me who were partying, having fun. And I had to keep the face that I'm enjoying the party. I didn't want to ruin their party. And that was like really, really difficult. And what I learned from this is that markets can surprise you with something that you never expect. And up until this day, I was sure that market cannot drop 10% in one single day. Of course, we knew that there was the 1929, there was crash. There was crash in 1987. Of course, I knew that it had been before, but I never thought that it would happen during my lifetime, or during the time when I have positions, and it happened.
Very, very interesting. Thank you, Illimar. And I think you answered multiple questions with that answer, with that experience. Thank you. Thanks a lot for sharing that. It's not often that we have the chance to hear the experience from somebody who was there during these crucial times that the market presented to all the investors around the world.
And one thing I wanted to share, what was really, really like creepy. I don't know how it's creepy in Italian.
Faventoso.
Faventoso, yeah. So in March 2009, with my brother, we were trading together a lot of time. And in March 2009, there was one evening where we sat in our office. The markets was about to close, the US stock markets. And S&P, the last quote was 666. And you can go back, it's historical, it's there, And I remember telling to my brother that, listen, what if the market will actually collapse, and they will actually close the market? Because it's fallen so much, like S&P 500. What if they will actually close the market and they will end the stock markets? Like it was so depressive and so much emotions. And this 666 was the bottom of the S&P 500. And from this March 2009 up until 19th of February 2025, S&P has gone pretty much only up.
Yeah. Well, so in hindsight, do you think that bad experience such as that one is fundamental? Is something that every trader should probably go through? The big loss, the big disappointment.
I think for me it was like a critical moment in that sense that that it made me extremely humble. I don't know what's humilde, I think. Humile, yeah. And it made me extremely humble, and it made me so much respect the markets. And I think it made me actually a better trader from that perspective, that from this moment on, I never ever thought again that I'm smarter than the market or something like that. Markets, it's like treat markets as your friend. Like don't fight the market, and be also humble. A lot of the traders, for example, when they have big profits, they immediately start showing off, hey, I'm the best guy, etc. And this showing off is not good in the markets, because it will be an emotional trap for you. So being humble in trading is very, very important.
Thank you, Illimar.
I wanted to say just one thing, just to get in touch with the last thing that Illimar was saying about the thing that you are willing to create like an army of traders that are profitable with your prop firm. And Illimar, I want to speak to the audience like that we want to build a boot camp in collaboration with you to our community. That's like the big announcement we were like keeping as a secret, and we wanted to have like the extra time to tell to our audience. You will be like our special guest, and
it's an honor. Roberto.
It's an honor for us. It's an honor.
Piacere.
È un piacere. And for this reason, like we want to create, we share the same goal. You want to create an army with your prop firm of profitable trader. I want to create the same thing with my academy. So this will be mind blowing for our community to create this kind of. I reserve my place. I see Annalisa's writing.
I just quickly want to explain is that the dream this dream that I have about creating this like closed club of 100 like successful traders, it's not for the sake of just making money, It's because I've been in business for so many years, and unfortunately I have had success in business as well. So I don't need it for the money, but trading to me, the markets to me, it's like my passion. And I really I love the markets, like the way that they, for me, markets is like a living organism. Like it's like a person, and I always admire these guys, like other traders, who are successful, and I want to surround myself and our team with successful traders, to have to meet, to share ideas, and I really admire the guys who are successful in trading, and they don't have to be big guys that are making hundreds of millions. I know some guys that are, for whom trading is a hobby. They have been successful for more than 10 years. They don't want any publicity. They only trade their own money. And I really admire these guys, because trading is a challenge. And those who become successful in trading, I consider these people to be probably the smartest people in the world, because markets comprise of a lot of talent. When you enter the markets, you are not trading against Pepe or Pablo or Giuseppe from the street. You are trading against the smartest, the most capitalized, the most experienced guys out there, from Tokyo, from Singapore, from New York, And imagine that if you come out from this machine in the end of the day, and you actually have made money trading with all of these smart guys out there, this is like the best gratitude or present or something that you can have. It's like, fuck yeah, I did it. And I really admire these guys who are successful. Yeah. Sorry
Nice.
for my French.
Well, guys, I'd say we really participated to a lesson tonight. It's amazing what we are hearing from the experience of Illimar. I think I posed most of the questions. Do you think we have time for a couple of other questions?
Yeah, let's maybe do a few, let's do 2-3 questions more.
All right. Give me a second. The inefficiency. How do you combine trading, business, and your personal life, your private life, on a day-to-day basis? How does that work for you?
It's very difficult. So because I have businesses, I have 4 kids at home. So I have also the trading investment portfolio. So what it has meant for me is that over the years, when I become older, I've have a family, so I have less time for active intraday trading. So my positions are more like swing, longer term trades, and this is the impact. In terms of the businesses, I have been fortunate to having really good people, and so mostly I'm involved on a very strategic front, and with everything else delegated, and yeah, so it's difficult to find balance, but I think I have perhaps tried to be too perfectionist in my life as well. I have tried to do everything the best way, and probably I have taken too much responsibilities and projects and stuff as well. So my plan for the next 5 years is that I want to push trading pit up, get these 100 top traders, then close the challenges, spend only time work-wise with these top traders. Tickmill is doing very, very well as a broker, so and so spend most of my work time with traders, learn about new strategies. That's my plan really for the next years.
All right. And this is a question coming from Nicola. With that answer, we answered a couple of questions in one shot. The cost of information. This is interesting. What is what would you say is the cost of the information necessary to make good decisions in the markets?
It depends on the asset classes and the time frames and many aspects. So, for example, if you trade intraday and you are algorithmic trader, you trade very short time frames. You don't need a lot of information. You need a fast data feed. That's what you need. And you need proper let's say computing power. So you need access to the to the data warehouses and etc. But you don't need like data per se, you know, a lot. If you trade very specific like commodities, like I do, like cocoa, cacao, you need access to data because there are very specific data providers. You don't get this data from Bloomberg or other, you know. What is good, for example, about stocks is for stocks you have so much, you know, so many public sources to capture information. So I think it's all what you really need to trade stocks. Plus, for example, if you are in Italy, you trade Italian stocks, then Italians have the best information about Italian stocks. So it's like it's not such an issue. Yeah. But to do it on an institutional level, you need and with a lot of asset classes, you need a lot of data. So I pay thousands of euros every single month for data.
Yeah, and I'm sure they include. And do you have any quantitative metrics that you specifically follow? This is coming from Pierluigi.
I use a lot. I use Bloomberg, I use Reuters, I use specific data providers as well. For example, there are data providers that are like monitoring at Twitter feed, like and the sentiments in Twitter. There are data providers that are for example, monitoring the traffic that comes out from the department stores in Germany, like and whether they have 2 bags or 3 bags or 1 bag, you know. So and there are like so for example, some of the larger hedge funds, they have hundreds of data providers, and some of these data providers are very expensive. So the most expensive I pay is like 5,000 euros a month for data, which means that in order for you to trade profitably, you actually have to have large positions in that market. So this is not like applicable, I would say, for majority of the traders.
Absolutely. Well, I think we went through almost all the questions, and so I would probably close asking you. What would you say was your strength, your main strength that pushed you through making, realizing all that you have done, your trading career, your businesses? It's probably a question about what's your motivation.
I think it comes from my upbringing. So I come from like very simple family. So I come from a small village. Our family was not rich, so we lived in small apartment, like 5 of us, you know. And I've always had this kind of. I think it comes from my mother. Is that despite difficulties, I never give up. So I oftentimes get this, this saying that, hey, what you have to worry about, you have these successful companies, etc. But I didn't come from success. I came from very humble. I don't want to say poor, but we were very humble, background and through hard work and never giving up, like you can never give up. I think like a good example is as well Elon Musk. If you read Elon Musk biography, you would understand that at certain point he was 1 week away from complete bankruptcy of all of his businesses. 1 week away. And that was 1 week away from the third rocket launch of SpaceX. So remember, the first 2 rocket launches of SpaceX were failures. So the rockets exploded. And so he put all the money in, his family money, etc. in, and then there was the last third rocket launch, and it was successful. And that saved him, but he never like gave up. And in trading as well, the art is to find your niche, your edge on the market, and you will never find it with the first try. And so if you give up after your first try, then you can never become successful. So you have to try, experiment, never give up, and eventually you will reach success. You may not become like, I don't know, Warren Buffett. It's difficult to become Warren Buffett. Only Roberto can become Warren. But you can become like even like a hobby trader who makes 1,000, 2,000 euros a month consistently. And this will give you like motivation, passion, good emotions, etc. And this is what trading is all about. It's trying to reach this profitability, however big you are, like you're small or big, but it gives you a lot of like emotional power when you reach success in trading, in business, in life, whatever. So never give up is my advice.
Okay.
There's also just one last question, because I was reading about this. Maybe this could not be in topic, but it's quite interesting. There's Powell that is asking to you, how do you feel right now?
Great.
Great. Okay.
Grazie mille.
Yeah, it was posted several times, so we had to ask. Everything's okay.
Yeah.
Everything's all right.
What I would add, just maybe last thing is that for your audience is that so I'm generally very approachable person. So if there are traders right now listening to us who have some questions or something or ideas, or I have also my social media channels. I'm mostly quite active there. I like especially to talk with traders. If you are not trader, then probably I will not talk to you. If you are trader, I will probably talk very anxiously with you. So do approach me and ask some questions, and we have like very transparent, open approach here in the company and in general in my life.
Nice.
Thank you, Illimar. What do you say, Roberto? Do you have any other would you like to add something?
Well, I'm like quite excited of what we are creating with this community, what we are building, and I'm really, really honored about taking place on those webinars. And I can't wait the time to maybe create another webinar like this with the community, maybe to share also some ideas, and maybe also about announcing the physical bootcamp we are going to create Illimar, because this will be very big and very interesting. We are going to create like a huge army of good traders that will trade like your capital on your prop firm. I mean,
I'm looking forward to this. And by the way, guys, I think we have to give on this account.
yeah.
So
who do you choose?
I like this question about this, if there are going to be like physical traders, or if the artificial intelligence is going to take over, because this topic, artificial intelligence in trading, is something that I'm personally really like working on right now, and trying to learn new stuff, etc. So I think this is going to be the theme for the next 20, 30 years, like artificial intelligence, trading, and the competition between manual traders, algorithmic traders, and that, I think that's like a good question.
So Vitale won the prop. It's Vitale, I think. Yeah, Vitale. I remember.
Yeah, that was spot on. Yeah. I was kind of worried about that myself. I would have asked if the question wouldn't come up. So, okay. So congratulations, Vitale. Your question has been chosen. And well, thank you guys. Thanks everybody. It was for me a privilege to be here with you, with Illimar tonight. I think this was very, very instructive for all of us, and it's going to give us a lot to think about our lives, our careers in trading. So I think it was a really great conversation. Thank you guys.
Thank you guys for all your time, and especially it's evening in Italy. So yeah, thank you very much, guys. A pleasure talking to you. Thank you.
Pleasure. We appreciate it.